Trader, and it is Thursday, April 20th, 2023. Yes, I am here 4:20 evening, doing the creative side of my trade business, which is exploring new ways to either filter existing setups or possibly find new setups. Not necessarily trading them immediately, but planning based on what I've been seeing in the market recently, and then comparing those ideas to markets that were maybe doing something similar in the past, so that I can determine whether or not I want to integrate a new idea into my my trade process. Now, if you want to get a hold of me on Twitter, it's @RedmondTrader. If you want to learn more about the algo that I'm using, it is based on the Trade and Perform algo, which is produced by my trade coach, Simon. Simon runs a trading room that is open 5 days a week, every day, where we all trade futures together. We can see Simon's screen, and he can even give you the algo to put on your desktop, and then that way you can creatively customize it like I have. And if you want to learn more about that, just email Simon. It's trade letter N word perform @gmail.com. If you tell him you found out about the room through me, he'll give you a 5-day free pass to the room, let you hang out for at least a good week, and answer all your questions, probably give you a phone call even, and see if it's a good fit for you to join the room. It's not for everybody. It's a small group. And we really are only looking for serious traders who want to improve their consistency. So if that's you, give them an email, and we'd love to hear from you. But that's all the marketing I'll be doing for this hour or so. What I'm going to try to do here is dig into a new idea. Now, I am actually long with an eval account, an Apex eval account, trying out a continuation trade. So if you hear my my rhythmic make noise, it's just the order getting filled, or either the stop or the target. I don't typically trade Asia. It's like it's like 10:30 Central. Is that right? Yeah, 10:30 Central. So 22. So the right now the only one that's really open is Japan and Hong Kong. So it's not a lot of participation. Doesn't mean that the algo setups won't work, but it's extremely slow. And you can't really just sit there. I mean, I can't just sit here watching it. But if I'm working on something and I see it set up, I will sometimes use the Apex evaluations as like test accounts to see if it if I can execute it in the same way as I'm studying it, um, and how to get a feel for like how the bar tends to form and things like that. Because when you do like manual backtests, oh, here comes Ronan to say hello. Sorry, he's very noisy. Whenever hears me talking, he assumes I'm calling him, and so he comes and wants to see what's going on. But he doesn't have any manners, so my apologies if he's noisy. Uh, the when you look in the history and you find something that might be a pattern, all you can see is what the bars look like when they're closed, right? Keep in mind, none of these signals are confirmed until we get a close. Let me just delete some of this. The bar does need to close to ensure that that the algo signal is not going to change. Once the bar closes, it doesn't the lines and the colors and stuff like that stop changing. But if you take a trade or make a analysis during the live bar, like right now, if I see this triangle here, I need to understand that that triangle's only going to be valid if this bar closes bullish, and by the time it closes bullish, the conditions could change, and at that point that triangle may no longer be there. But for instance, this triangle on a bar that's already closed is not going anywhere. That's already been validated, right? Now there are two exceptions to that rule of the indicator validating as soon as the bar is closed. One of them is these little flags on the swing lows and swing highs. Ronan, stop. The little flags we call apexes on on Simon's algo. They look like these little up and down triangles, but I get confused with the triangles going in up and down directions, and so I'm a little bit ADD, so I sometimes see things a little bit differently than I'm supposed to. So I need them. Like I just like things a certain way, right? Everyone kind of has a preference for how they want things to look, and I prefer having the apexes being sideways triangles, which I call flags or apexes. So those require 2 to 3 additional bars before they will print. So this one didn't show up until this bar printed. It's usually 2 more bars that need to go, depending on how close we are to that swing high. And the idea is they identify where the prominent swing highs and lows are, and then I can use those for future locations. So they're not an entry signal because they're not there when the bar closes. It's just to identify that this isn't a level that is important, just like this level is important because of that little flag. And once we get over that little flag and close a bar up there, the variety, I can start to take trades that I normally wouldn't be able to unless I had momentum in the market. So for instance, having this flag here and closing a bar above it, particularly getting the VPOC line, the yellow line, which is connecting all the individual bar VPOCs together. So that's where most of the volume is, inside that bar. Cat, stop. He keeps up. I swear he knows how to turn off the computer, so if I suddenly lose everybody, it's because he's a jealous bastard sometimes. He has climbed up and slammed the restart button before while I'm in a trade. It's happened. I tell you, be careful with Sphinx. If you know anybody with the Sphinx cat, they are mischievous. They're great, but they're very mischievous. So now that we've gotten over this one and we've closed a bar, and especially once we've gotten the VPOC line, the yellow line above it, I can basically assume that if I have opportunities to buy down here, I probably should, because there's potentially stuck shorts down here is the way to think about it. And so the opportunity that I saw was this one, and this is not a true apex trap like Simon teaches, because the way Simon teaches it, which is the best way to do it, is you wait for a down apex like this to be tested underneath and then buy it when it breaks out from there. What I'm experimenting with is I want to see if these dots right here, the blue dots on the bottom of some of the bars, when what I'm finding is this customized indicator here, which has a lot to do with volume, but I'm not going to go in like how much aggression there is in volume. It's very similar to the volume zone oscillator. It's just measuring things differently. When that indicator prints a blue dot without going under the zero line, that level usually, what I'm finding, it usually gets tested in the future. Not always, but often. And if that test produces a dot and or produces an aggressive bar like a star or a green bar or other signs of aggression, assuming it's in a bullish environment such as supernova condition, which getting over an apex and closing over it like this, assuming that's happened already, oftentimes that this close here after testing below one of these here and then closing bullish with a sign of aggression of some kind, this one's got multiple signs of aggression, they'll usually continue higher. Now the stop for this technically goes down there, and there's always the chance that it could come down and test it again, right? Like you could technically get swept out because it's not a true apex. It's going to happen more often than with the trade and perform entries. Like if you wait for an apex to get trapped back in, this little test and then reject higher is going to happen occasionally, right? So the win rate is not as high as it would be if you waited for, let me find one right here. So here is cat, you need to chill. Here is an apex with a little flag. We got under that apex and printed a bullish bar. The very first bullish bar came back into the range of that bar with the apex, right? That one happened to have a dot as well. But you see that when the dot formed, that indicator was way down here. So the idea is it needs to be a bullish bar that closes back inside this bar's range. It needs to be the very first bullish bar of the rotation needs to close back in there. So it can't go all the way down here and then come up. That wouldn't count. It's got to just go test, reject, right? And then usually you're going to get rip as long as it's lifting, right? If it's bullish. So if you have a reason to think that's bullish, those usually work. So here, like I said, there's no apex here, right? There's no flag, but there's a dot. And so what I'm experimenting with is how often does this wick produce the same thing? Okay, that's one idea, and I introduced it. I think it was either yesterday or Tuesday. I think it was Tuesday. If you want to learn more about that setup, check out my I think the stream is called like testing a new setup or something about trend days or maybe it's like trading trend days. I don't even remember. Sometimes I do so many of these I forget what they're all called, but it was the one that I did on 4/18, I believe. So if you want to learn more about that setup, I go into depth of how to do it and give some examples from that day and like the week before. So that's where this setup came from. I don't know if it's going to work or not in this situation, right? Like I've got reason to believe it should, but yeah, I don't know. And since I was looking at the charts, looking for this other new idea, I thought I saw it set up, and I'm like, well, might as well take it in eval. I'm not really watching it very closely, and it's what's it called? It's Asia, but no reason it shouldn't work here. So I went ahead and took the trade. And I just put like a 20-point stop on it, so I didn't really have to worry about it. So I think I got in on the pullback. Couldn't have been a 20-point stop. I don't know. I've always stopped down here somewhere. I'm not really concerned about it. I already took care of it. So whatever happens with it happens. And it's one trade on an eval, so I could kind of care less. But like I said, if you hear the noises of trades getting done, it's that trade closing. So, and it, like I said, it could just come right down and rip us out. So what I'm looking at today, if you've been keeping up with these, you'll see that I change the layout occasionally, taking things off and adding things, changing parameters and stuff like that. My Twitter buddy Ed, I think it's at 7EKG. I hope I have that right, Ed. Is his Twitter. He did a video today or maybe yesterday about the Kiwi trailing stop. So you can find it on Sierra Charts under studies. Kiwi's trailing stop. It's just a regular study. You don't have to pay anything extra for it. And you just hit add, and then once it gets over here, I'm currently playing with the settings. Ed does things a little bit differently. I'm trying to see if I can use just one instance of this study rather than two. And the settings I'm using right now are ATR factor of 2.3 and an ATR length of 9. ATR length of 10 might be better, but this seems to be working okay. So what you're gonna see, I'm not using it just like usually. I'm not your. Whenever I find a new indicator, the first thing I do is I read what the math is behind it, and then I figure out what people are using it for and why it doesn't work. Because we've all tried all the indicators, right? And this one's relatively new to me, but the concept is familiar. It's kind of similar to the anything that uses an ATR, the average true range of an instrument to determine how far your stop should go. It's kind of similar to that. I think chandelier trailing stop is like what they used to call it, but some guy on the Sierra chart, I think it was Sierra Charts that came up. He was on like one of the forums, and his name was Kiwi, and so he like coded it for Sierra Charts. So that's why it's called Kiwi's trailing stop. But it's just a trailing stop that takes a multiple of the ATR based on and then prints a line that far away based on your mathematics, right? Whatever you put in there. So the line is this green line here. So when it's bullish, you're going to see the green line show up, and it's going to print and move based on 2.3 times the 9-period ATR. Okay. For it to disappear, we need to close a bar below that green line. When it does disappear, it's then going to recalculate the 9-period ATR to the opposite direction and print a red line like this. See how it just kind of shows up out of nowhere? So it's kind of like the parabolic SAR. If anyone's ever used that, it's very similar concept, and it's also sort of like using Bollinger Bands because it's the math is very similar to a Bollinger Band. It's also very similar math to a Keltner channel. So all of those things I know work sometimes. And so I figured I'd take a look at it. But like I said, as usual, using the way that Kiwi, the one who came up with it, originally suggested was to get into a bullish trade and trading momentum and to trail your stop below this line. So right now you would wait for that close below here, and then if you got the close below there, you would then exit the trade. You wouldn't go short, but you would exit your long, right? So if you were short here, you would exit your short here, right? Because the line got broken and got to close behind it. So that does work when it's trending. It'll work on the particularly on the higher time frames. If you look at the 80 tick chart, for instance, sorry, I've got some. I forgot I added some levels in here. I wonder if I can hide all drawings. There we go. Okay, there's still a lot on here. Sorry, but we're looking at. Oh, you won't be able to see it because I had hid the drawing. So the red and the green are the lines we're looking at, right? So on the higher time frame, this is going to work a lot more traditionally. Like if you think about it, if you identified down here somewhere that there was some aggression or maybe a volume shift like this, and you're like, you know what, I could probably buy a dip, and then you see this green show up, and it's like, well, hey, as long as that holds, it says it's bullish, right? So that's the very simplistic way to use it is when it shows up, see if you have a level somewhere, figure out if you can identify on the footprint whether or not there is aggression in the auction, and then follow that aggression in, putting your stop below this. Now the problem is trading futures. Let's say you got long here when the 80 tick confirmed like, oh yeah, there's definitely aggression, right? Once you got that star, well, that's at 13 like 018, let's say, right? Well, this Kiwi trailing stop is down at 12,934.50. That's way too big of a stop, right? Way too big. That's like what, 100, almost 100 points, 80 points, something like that. You can't have a stop that big with futures. You could technically probably do it with options, I suppose. But traditionally, that's the way you would do it. If you were trading shares or like QQQ rather than futures, and you were swing trading, that would kind of work, you know. And then you'd get in the trade here, and you get a little bit of a pullback, and then the Kiwi trailing stop trails your stop, and so when this one eventually closes below that green line, you right there, you would then exit the trade. And like I said, you got in at 13,018, let's say, and it's getting you out 13,142. So you're making 130 points with a risk of, what was it, 80, something like that, right? So it works, right? It works the way it's supposed to be used as long as you've got momentum. But you can't trade. In my opinion, you can't trade futures like that. Not on the 80 tick, because you don't want to have that big of a stop. Even with micros, it's unnecessary. You could do better. You just have to use other methods that are a little bit more precise than that, right? But the same thing works on the short side. Like up here, if you identified, you're like, oh, you know what, we're like triple topping here. Like maybe I'll get short, and then the red line shows up, and it's like, yeah, you know what? If this starts to look aggressively short, I could probably take a short. And so right here, you could get short. Right there at like 36, and then it's telling you that you'd have to put your stop at like 19, let's say, right? 219 from 3, is that right? It's a big stop. 136, and it's saying start your stop way up at 220, right? So it's like that's like a 90 point stop now, or is it? Wait, yeah. So it's very, very, very big. But like I said, the concept is good. Like it and then it gets you out here at 13,117, and you've made not very good risk reward, but it worked, right? You've made a couple points there, good 20 points on your 80 point risk, right? Is it a good idea? Probably not in this environment, but if you had something like this, where like, wow, that could be a really big double top, and I've got this target down here, well, cat, stop. If you had a way to get short, it's telling you put your stop up here, right? And this one trails right here and pretty much takes you out for break even. There's got to be a bigger one than that. Eventually this gets, here, is it this one? Sorry about the cat, you guys. He never stops. He's a sphinx, and they're just very noisy. If you're not paying attention to him, he's screaming about it. Yeah, so I mean, there's not going to be as many short opportunities on the higher time frame unless the VIX is higher. Here, let me get rid of this. It's just, we just don't have enough big flushes. Like this one is pretty good, right? You've got a double top, and then you'd have to try twice, right? But let's say you got it here, right? And then your Kiwi trailing stop takes you all the way here, right? So if you catch them, they're good. But anyway, that's the traditional way to use it, right? It's fine. But it's not the way I'm using it. I'm aware of that, right? That's how that works. But here's what I'm finding on the smaller time frames. You could probably change the settings a little bit and make it work on a smaller time frame, I'm sure. But what I find, let me just show you on the 24 tick, and you'll see that this actually works on every time frame, whereas that other method does not. See, okay, here, if you tried to do it the regular way, right, the way that, here, let me get rid of all these lines if I can. If you tried to do it the regular way, sometimes it's going to work, right? It shows up, you get some sort of sign of aggression. Maybe you got short here at like 55. It says at this point, put your stop at 86. It's bigger than I want it, right? That's 10 points too big in my opinion. But let's say you took it, and you're obviously going to get your risk reward as long as you're right about direction. So see how we can't close over it, so it's telling you not to exit there. 13,057, right? So from, what did I say? 50 to, that can't be right. Was it 150? 150. Yeah, so like a 40, 50 point move, right, on the 24 tick with a 30 point risk. It's too much for my comfort, but with micros you could do it, with options you could do it, if you had a reason to think that it was gonna flush, right? But you're not gonna see that very often. As you know, if you watch futures regularly, that's not very normal, just to like drop 50 to 100 points without really, a 20 or 30 point pullback. But it does happen, and it's good to know that hasn't broken, I think. In general, that's probably a good thing to be aware of. But like I said, what you'll see is that a lot of times the market will do the like back and forth balancing. So like, let's say you had no idea what was going on behind you, and you were just using the traditional method with this Kiwi trailing stop. Okay, so here you're short from up here. That trade appeared to have worked, and then they tell you to get out of the short, right? So if you then had a reason to think that you were getting long, I mean, there's nothing aggressive here, but let's say you did, that one stops out right here, right? And then you can see my algo, or Simon's algo, identifies an aggressive trader here, and then suddenly you come back up and you take out that apex from above, right? So it's almost the exact opposite of what you want to see, which is see the green line, get a sign of aggression, never break it and go, right? And instead, what this did is it was show the green line, no signs of aggression, get under the green line, then you see aggression, finally then you break out, right? Now that it's bullish, guess what? That green line is going to work like it's supposed to, right? Because it's trending. So if you're in the room, or if you've seen these or Simon's videos before, you can see that we have an apex. And so once you've closed above that apex, which occurred, let's say for sure, right here, now we know it's bullish. And normally you're going to be able to buy signs of aggression, right? Particularly if we get some kind of a dip. Well, look at how this trailing stop tells us that dips down here in the bottom part of the channel would actually not be bullish anymore. Isn't that fascinating? So it's saying, look, you can buy, but you're not going to get a test down here, because if you did, best case scenario, it's going to do one of these, right? So look what happens. So your pullbacks end up holding the line, right? Because it's so bullish, and they don't get anywhere near this bottom part of this channel. See that? Here, this one finally touches it a little bit, and then it goes. So it's like barely a touch. But look where this went. See that what I'm trying to point out is the pitch of the indicator, and this is what Ed showed me. The pitch of the indicator is going to tell you a lot about where you're looking for trades. So when the indicator is doing this, you're not looking to buy down here. It's not going to work. If you try that, you're gonna get hosed. Okay? Whereas when the indicator is doing this, well, now anything in this lower channel is fair game. See that? So look, right here. Indicator goes flat. Now dips can be bought, right? Now the hard part is, like I said before, the traditional way to use this is when it closes beyond the green line, it's no longer bullish, right? That's your trailing stop. Well, what I want to show you is that if you know a little bit about what's going on the higher time frame, higher than whatever one you're looking at right now, you can actually take advantage of all of the bulls who sold down here, because assuming that someone is still filling an order and they show up with aggression, and what that looks like is usually a star or on the algo or a green bar, or some other algo signal here, a ring, a dot on the bottom, all of those signals. If that shows up just as we're breaking down below the green line like this, and the bar that broke down the green line is purple, that's basically saying everybody gave up, right? Because of the location, probably. They said, hey, we're, more than 2 ATRs below, like beyond what we usually see. I'm no longer a buyer. And then someone else is like, thank God everybody finally sold. I was waiting to buy this, and they all buy it. Well, how are you feeling if you're the one who sold right there, right? Like, how do you feel now when someone aggressively comes in right when you gave up at the low? I'll tell you, like, I don't know about you, but for me personally, I'm just like, wait, what? Right? And then what usually happens is some kind of a rip, usually to break the high. Now, in this case, today, it did not, right? And then it rolls over. Okay? And this one clearly is far too deep to be expecting continuation of the bullish trend from over here. Whereas this one still had a chance, this one does not. Because not only have you broken down underneath the green line, but you've actually rejected, created a red line, and continued lower. And I'm finding particularly when you can get yellow dots here that aren't immediately taken back, it's too late to buy dips. So now this one does get you a little something, right? But what I'm saying is if you're trying to catch this trend and you see break green line, attempt to bounce, fail, yellow dot, continue, it's too late to buy. It's not too late to sell, because look, I know some people have a hard time flipping back and forth, but if you can flip back and forth, if you understand how to do that, look at the exact opposite, the exact inverse going on, what's going on here. You started turning red here, right? Which is, like I said, the first opportunity to think that, oh, you know what, this could actually be bearish, right? If we have a reason to think that it's bearish, I might be able to follow a aggressive trader in. That would be right here, right? Now, what I'm saying is I can actually buy this, even though I've seen the red. So I know that's a little confusing. It's like, it can't be bearish and bullish. It's like, yeah, it's because it depends on what's going on in the higher time frame and where you are on the chart. If you're trading into resistance, then pay attention to the red line. If the higher time frame is bearish, pay attention to the red line. But if the higher time frame is bullish and you've already crossed resistance, you probably just trapped some sellers down here, and all the buyers technically potentially gave up, and then suddenly when they went a little lower, they reclaimed that green line in just one bar, right? So if there's not resistance up here, you could be a buyer. But let's say there was resistance up here. Let's say you can see all the drawings and you're like, oh, I've got an anomaly up here, and I expect people, you know, a lot as well as like a previous value area low or something. I expect people to show up and sell up here. Well, now you might want to skip the scalp, right? Which I'm calling a trailing start scalp because it's the opposite of a trailing stop. It's a trailing start, right? You get in after this trailing stop gets tested and rejected. It's just a scalp. It's not a momentum trade. It's just a scalp reversal, like a counter trend trade, but it'll work as long as you've got distance to resistance on this time frame, and as long as your higher time frame is also bullish. But in this case, you did not have room because there was resistance here, okay, from a previous day. So all of a sudden, this red line becomes a lot more important than the green one. And then what you see is pink coming up to it, right? And then bearish with a dot and an arrow, both momentum signals, basically, just saying that there's some sell momentum going on in there. You could, if you weren't sure because you didn't get a star or a green bar, you could wait for the red triangle to be like more confident. Plus, what I talked about in my previous stream about this magic dotted line. Remember that if the higher up this dotted line gets, the easier it is for sellers to trap buyers, right? Your triangle entries need to have VPOCs. The yellow line needs to be below the dotted line if you're bearish. And if you're buying triangles, it needs to be above the dotted line. So like, for instance, this one, the VPOC is above the dotted line. So this one technically is still bullish. It's just that we are so far, it's so extended that you might have to put your stop pretty far away. But remember that that's technically, that's all good. This is better, right? This one's better because you're right there. You're not so extended from the dotted line. So that concept still holds. Now, you know, this one, the pink one, the triangle up, it was above the dotted line and he got trapped, right? That's it. When that happens, it's a sign that we might have a reversal because those, they don't work every time, but they work often. And if that trade where you had aggression following through, right? So someone aggressively bought and then people like chased basically. As sellers gave up, they all chased it. So it's a pink bar, sellers giving up, and it's a triangle, meaning like everyone's like panicking like higher, right? And there's like an increase in momentum suddenly. So that is usually a sign that you're going higher. When it gets immediately stuffed with a star in particular, or an orange bar, or any other, if you get like triangle up and then big sell bar, basically, this guy's trapped. And potentially that can become future resistance. And we already knew, you'd know that if you were in Simon's room. So that would be another thing to watch for is, sorry about the fighter jets, they're flying at night recently, I guess training or something. Usually they only fly at lunchtime, but occasionally they'll fly right over my house and it gets pretty loud. So yeah, when you get these triangle up on pink bars that are at the highs like this, particularly if you've got this dotted line and it's not lifting up with it, right? So volume over time is like down here, but you've got people panicking out up there. So let me show you what this looks like on the footprint. For those who don't have the algo, this will make more sense. Where is it? 933. I'm not sure why I'm not seeing it. Maybe that shouldn't matter. 933. I don't know why I'm not seeing it. It's right here. So, I don't know. Nope, that's not it. Weird. Okay, so it's in here. At the highs. 933. Right here. So, on the footprint, what you're going to see, just make this a little bit smaller. On the footprint, what you're going to see is people coming up into the anomaly, into resistance, suddenly panicking out, probably, of their short, or chasing long, and then they go up and there's just no volume up there. See that? They finish the auction. They're just like, well, I guess there's no one up here. And then they fall right through it, and that ends up being a star bar here. Right, so this one ends up being a star. But even before the star, the fact that we got all the way up here, yet if you drew the volume, I can just see it, but if you draw the volume over this little consolidation, what you will see is, before they break down, is all the volume is down here, right? And we shot up out of there. Somebody bought, right? Aggressively up there. But there was, after that little bit of follow through, like this guy bought, and then they went, zoop, and then someone's like, oh God, and panicked, right? And then there's just nothing. Like no one's there. Look at this, no volume suddenly, right? Over this. So what happened? Everybody came back in after this got retested, right? So if you see that, particularly when all the volume is down here, because what that means is that the next stop is back to the volume, right? The volume build. So you can see it on the footprint, or you can use the algo to watch the footprint for you. And in that case, what it looks like is the dotted line is down here. We get a pink bar that spikes up to make a new high, maybe even another wick, but that dotted line just stays there, right? It doesn't lift with the pink bar. Kind of like this, right? See how the dotted line is down here? These bars are vulnerable to getting trapped. If the next bar is bearish and it gets back to and it retraces all the way to wherever the volume was before, it's going to reverse. Right here, I'll show you. We'll find another one. We'll find another one. So all you got to do, you could, even without you could do this without the algo manually. You'd want to draw where the volume is in like a consolidation. You can see it's right. See the little pink? That's the VPOC, right? So what it's saying is, when you get spikes out of here that make new highs on low volume, right? What you're going to see is this dotted line won't lift, right? Because there's going to be no volume up there. So you won't get a lift in volume. And then what will happen is you'll give up this line, the VPOC line, not just with price, right? But with volume, the yellow line. So see how yellow line gets stuck here right above that volume build, and there's not enough sellers to push it down here. The result is everyone knows it's going higher, so they all buy. Right? So the fact that this dotted line got shifted up gave us a hint that this is probably not the place to be selling. Right? It's not ready. Okay? That's the way to think about it. So like here, even this one, look. You can do this literally anywhere. There's a bunch of them. So any of these pink bars, right? They're all technically vulnerable for getting trapped. And all you'd really have to do is know where the volume is. So find the consolidation, right? In this case, it's this. I'll do these first ones first, right? So here's the consolidation. The volume point of control is right here on this pink line, right? See how when we make this spike, yellow line where volume is not able to get back down there, right? Not even close. Doesn't even approach it. It's not bearish, right? And then as you spread that out, what you're going to see is if we put big volume in here, it's going to shift, right? And it's going to shift, and then we're going to spike, and then they're going to try to take it back. But what you'll see, if you look closely, is if the bearish bars, put enough volume underneath here, the result is it'll become resistance and we'll go lower. But if they get under there and they find buyers like this, so they got volume under there, they went a little bit lower, they advertise lower, anybody want to sell? And people are like, nope, but I'll buy it. And then they're like, shit, I'm out, right? And then they try to get there again, nope. And so here you know it's done, right? So if you have the algo, it's very easy. All you really have to do is say, has there been a pink bar, right? Is there a pink bar, yes or no? And then are we trading above that pink bar? And if we've gotten the yellow line on a bull bar to get above the pink bars, well, then it's not going to reverse, right? But because how are you gonna reverse? Well, okay, it's not going to reverse all of a sudden. It might reverse if we wiggle around up there for a while and then lose it, but we're not just going to lose it all of a sudden. But what does happen? See, like this one, I showed that one already, right? They spiked, they tried to pull it back, they couldn't get any volume down here. Everybody gave up. They spiked, right? Nobody even tried to push volume down if you watch this yellow line. And then finally, they spike, right? Look at the yellow line. Goes up and then plummets. See that? Buyers showed up here after giving up for a bar, right? Purple's like everyone's pulling their orders from the order book. People are thinking it's going to zero, right? That's basically what like the mentality is of a purple bar. Like somebody who bought up here is like, oh no, I'm going to lose everything, right? They pull all their orders. They were going to be buyers. They were going to add, and they're like, nope, not going to do it anymore. Pull their orders. Illiquidity causes price to drop, right? But then if it gets down here, which you'd think is bearish, but when it gets down here and someone was waiting for that to happen and they're like, oh good, I can finally fill my order, the first thought with purple bar followed by an aggressive buyer should be, we're going back to resistance, right? All the sellers that just sold heavily, look at that yellow line, how steep that is. And you can see it here too. Steep, steep, steep selling. They have potentially been trapped down here, right? So they're going to fly back to resistance. The difference here compared to every other time on this rotation, all of these, is resistance now is right here, right? We've gotten under a volume build. So look. The volume build is here. See that little pink line? That's where all the volume is if I measured this whole rotation. Down, up. Most of the volume's there. We've gotten under it on a bearish bar, and it's now acting as resistance. It's bearish. Right? So now the red lines are going to mean more. And my very first opportunity is going to basically be if I can identify it's bearish, and we test that red dot, that red line, or just beyond it on a pink bar or a wick, and then we come back in aggressively, I can probably short if it's followed by a triangle, as long as volume is below the volume build. So you can see generally the volume builds, this pink line, is going to be lined up to my magic dotted line. If you look, I'll get rid of the volume build real quick. And you'll see the dotted line is right there. That's kind of why I call it the magic line, because it moves basically where I need it to be. And I'm referencing where volume is compared to that line. So by the time it gets to the purple bar, the yellow volume line is below that dotted line. So right there, I know that that is a valid short because it's got a triangle, a purple bar, and VPOC is below the dotted line. So that's just a long-winded way of explaining why that setup works, right? But the added benefit of having QE's trailing stop is not necessarily that I would put my stop down back here, because honestly, I don't think I need to. I think I'm just fine putting my stop about 12 points away most of the time, because if there's momentum, it's not coming back. And if it does come back, I'll take the 12-point stop, and then I'll just enter again if it rolls over with another triangle. So rather than using it that way, what I want to look at is what's the pitch? What's the angle of that? Because if the angle looks like this, when my triangle comes in, right? It's bearish. Oh shit. Speaking of, I think I'm gonna get stopped. Perhaps. Let me just double check. How far back am I? Make sure my orders are set right. Sorry. Oh, I'm on the wrong. Yeah, it's probably gonna get stopped. Whatever. Nothing's changed. I don't think. No reason to mess with it. Okay. So where was I? Nope. One very similar to that. There we go. So here, the pitch of the line is very steep, right? And when I see that, I know that momentum is pretty heavy. And then I have confirmation of that because volume zone oscillator is dropping under zero. See that? That's bearish. And then this indicator is dropping and it's not making a divergent low, right? We wouldn't know that quite yet. But here it's still dropping and it's got the potential to go lower than this. It's not like too low. There's no hidden divergence. There's no reason to think that like the buyers will miraculously turn this around. And if you look at the top, there was bearish hidden divergence up here. It went higher than the previous high, but price didn't. So already sellers had an advantage, right? And if I would have noticed this divergence with price, right away I could look and say, well, where's the red line? Well, that's really where I want to be selling. If I had the opportunity to sell a test up there, that's what I want. Well, the test up there probably already happened, right? By the time you get there, because look, here you don't know. You don't know for sure that's the top. So like you might not want to sell that, right? But when you get this and it's turned and it's like, oh, well, that was an ideal place. And I was just there. I'm right here, right? So either sell now or sell the next pullback, depending on where you are in the chart, right? That's really, if you think there's momentum and there's divergence, then just find an aggressive trader and follow them in, as long as we are reacting bearishly to tests of that line. Now, in this case, they didn't really give you another chance to get in, but what I'm finding is when it's peaked, when it's pitched like this, when the red line is like straight down, these dots, like I said, as long as for the bearish one, they have to be under the zero line here, a trap back in off that line is probably sellable. So if we come up above that, like that, and then we turn around like that, right there, I'm investigating whether or not that is a short. Now, the tricky part, in my opinion, is we closed a bar above the red line, which I said earlier traditionally is considered a place to stop being bearish. But what I'm noticing, at least with NQ, is that this is very natural during a bear trend to be testing it up there on low volume. And you can see that the volume is actually down here and price advertised way above it up there. But look what happened to volume as soon as we got done doing that. Volume went lower, right? So it came up, the yellow line tagged the red line basically, where the red line would have been, right? So if I extend this line, make sure this is perfectly clear. The yellow line isn't even reaching it, right? On a bull bar. And it's pink, so like, the only reason it even went up there is because people were pulling their orders off the order book. Like, there weren't even really any aggressive traders up there. Now, relative to what's been going on, relative to what's been happening, all of the volume is down here. And I can also see that on my dotted line. Look where the dotted line is. Right? See how they can't raise it up like I was talking about before? Dotted line is here. Price and volume went all the way up here. And then the response to that was return back under the dotted line. Well, the dotted line tried to shift up to like mean revert, but it's nowhere near where we were up here. It's nowhere near resistance, right? So by the time we get the triangle, we're already all the way down here, so it's a little bit late to be getting in now, in my opinion. I mean, unless you think you have to target much lower and you think this low is going to get taken out. But from my point of view, I think the likelihood is that we're going to test wherever volume was developed here. So what I can do is I can find the low and test volume, and you can see that
if we draw the volume point of control on that area, that is where most of the volume was. It would be very natural to test there. Well, we're already there. See that the rotation was so small that we're already there. So it might be a little bit too late to enter unless you had a target lower. And that's exactly why this bounces, is because we've already hit the volume build. And if you look at where volume was here, the other reason not to take this is it's a purple bar, right? And it's, which is inverse of pink. So it's the exact same logic in reverse. We've gotten illiquidity to the downside because buyers are pulling their orders from the order book, but all the volume is at the highs. See that? So yes, they decrease volume, but not by very much. As soon as they tested this high volume area from this rotation up, they came back and tested it. There's no volume there now. Nobody's willing to do business there. Excuse me, which means that basically we're leaving the area. The only way you'd come back, only way you would come back to a high volume area and then immediately bounce out of it is if there's no one interested in doing business there. Right? That's just the way auctions work. And it doesn't matter what time frame you're on. That's literally just the way it works. So the next step after testing this high volume area with a low volume bar is usually leave the area one way or another. We're not going to spend a lot of time here. And so they do. On this time frame, right, we leave the area. Where it gets confusing is that on another time frame, we're balancing. So if I back this out, you can see this entire thing. If I do like a quick draw of this, we're right at the high volume area. See that? That pink line. We'll put a white line there now. That's where most of the volume is of this entire thing. It's a higher time frame look. It's this, right? Which is balanced, and we're in the middle of it. So what does that mean? Well, normally it means on that time frame we're gonna spend time there, right? Because we're not coming to it from far away. Oh, I'm gonna get stopped here, aren't I? We're not coming to it from far away. I think I'm about to get stopped. We are stuck rotating around it. We haven't left. And so it's just acting as a magnet, and we're wiggling around this line, right? We go over it, we come back through it, we come back over it, right? And that's just the way it works. If we would leave the area and then come back to this spot and find no interest there, zero volume, and leave the area, well, that would make sense on a higher time frame, right? But here on this tiny little time frame, tested it, there was no volume at that point, so they left the area, and that's pretty normal. Okay, so anyway, in this process, you can see there is no green line and there's no red line. The only time that happens is when you trade back and forth in an area. And generally, that's a really good time to just, on this time frame, to just sit back and wait. So if the red line gets breached and then they go down and they don't create a green line, it usually means continuation lower. But if then there's no red line again, it's like, oh, they're just stuck, right? And then when you do the big volume build on a higher time frame, and it's like, oh, I draw the volume here and all the volume has been right at this spot, they're just gonna like pin it here for a bit, right? And then you look at the time of day and it's like, we're coming into lunch, and no wonder that's what's happening. It's like I think this is looks like London close, right? And so they're just going to pin it right at that volume point of control, and see how they're just going back and forth and back and forth. This is just, you'd prefer just not to trade in here. So having the red disappear and then see no green and no red is a sign that you really can't trade this time frame. Now, on a smaller time frame, it's going to show up. See that? And it's going to give you a really nice hint for, here comes the stop. A really nice hint. It keeps on approaching it and then bouncing. I'm sure it's going to take me. It gives you a really nice hint for which side might have the first crack at leaving the area. It does not necessarily mean it's the side to join. But when you have big drop, right, and then you break through here, and then you pull back, so you wouldn't know until this right here. So once you've gotten this pullback, and you don't see a green line here, and you don't see a red line here, right? Zero data for a couple bars, like 2 or 3. If I go to the smaller time frame and I see, oh, I see, there's a green line on the smaller time frame, there comes the stop. There's 14 orders ahead of me. They might not get it. That'd be so funny if I was 1 tick behind it. I'm sure they're going to sweep it. There's still technically 14 orders ahead of my stop, so I'm sure it's gone. They're going to sweep this area and then rip right back through it probably, which is interesting. But yeah, since I see this green, I can watch the pitch, remember, and that's going to tell us whether or not this is a strong trend or a weak trend, and it's going to tell us what kind of trades we can consider. There we go, got me. I'm stopped on that other trade. The pitch of the line is going to tell us what kind of trades we should be looking for. So you can see right away, it starts out pitching like 45-degree angle, right? So that suggests like maybe we're looking at a V recovery. And we are. V recovery, right? Now those rarely make it all the way back to resistance. It's just not a thing that happens very often. It's very rare to see this get taken with one rotation. It's just not everyone remembers when it does, but that's not normal, right? So normally when you see this, what you want to do, if it's Ving like this, and you see the difference is this right here. Sorry if you hear the cat purring, he's noisy. The difference between this and this, I talked about this one, right? The pitch is the same, right? The line is going in a 45 or steeper degree angle, right? Just inverse. But here we had already established resistance and trapped buyers, right? So the potential for a momentum move and to take out a swing is high. All you need is to find an aggressive trader and to follow them in. I said maybe the triangle would work well, or any dot or anything like that would work anywhere in here, right? But if you look at the smaller time frame on the bull side now, what you'll see is there's no support here, right? They're trying to V-bottom this, which is not going to work 80+% of the time, let's say. It's not going to work. They're not going to, what I mean work is they're not going to come up here and break the high, which is the inverse of what happened here where it broke the low, right? This lower high opens up the potential for these swing lows to get broken. Because remember, this was a bullish trend, right? And I said that once you see this trap, reject, and then get back under it, you know it's too late to dip buy because we've gotten underneath this green line. We've tried to recover and we failed, right? Which that's what I said, I hope. And so that's telling us this trend is at risk. In other words, these lows, if they get taken, and then we see someone try to buy it, we shouldn't, right? So if we saw this guy print bullish, and we could say, oh, they're defending that. No, don't do it because you've got trap buyers up here, so don't do it. Not there, right? Wait for a deeper support on a higher time frame. But here you can see you've got a big drop, right? No second low, no established support, nothing. And you get this pitch of the Kiwi trailing stop, right? Just like all of a sudden 45-degree angle. So yeah, don't chase that is what I'm learning, right? Not without established support. You don't really, all that they're doing here, they've trapped, this is like a delta divergence down here, and they've trapped him down there. So it's a scalp. If you see that, the arrow after the dot is a scalp, but it's nothing more than that. Not to mention this is a very small time frame, and the higher time frame was just very bearish, right? But what you'll see is when it straightens out, when it flattens out, what Ed was saying, and I agree with him, is that once it flattens out, now if you have a reason to think it's going to be bullish, and maybe you would here because of a level or something like that, all of a sudden, purple bar followed by an aggressive bar, like a diamond, a green bar, a star, a ring bar, a dot, anything with like an aggressive signal on it, which is basically everything but pink bars on my charts, right? Any bullish bars except for a pink bar that follows a purple bar in this exact location. I really want it to touch the green line or even cross it would be better, either with the wick or with the purple bar. Then that's my ideal entry to join a bull trend. The problem is I have no reason to believe there's a bull trend here, right? Because we've already mentioned that we've trapped buyers, and so this trend got broken, right? So on this tiny little time frame, if you thought this was a bull trend, you could technically buy this and expect higher. How much higher is going to depend on the higher time frame, and wherever you have trapped buyers is probably where you're going to get stuck. So an easy way to know where that is, in my opinion, is just look at a higher time frame, right? So if you're here, if you were looking at the trade here, and you're like, can I buy that? Well, my entry would go definitely no higher than 15, let's say, certainly by the time you got the triangle, let's say 16 just to be sure. And my stop would go, well, really you could get in here at like, let's say 12, and your stop would go like 02, let's say a 10-point stop if you want to be aggressive. And if you want to be conservative and you waited for 15 or 15.50, but you still have like a 15-point stop, let's say. So I need to know, could I get 1-to-1 there? Well, to do that, I need to get to like 30, right? So the first thing I want to do is I want to look at my higher time frame before I get into the trade, and I want to say, is there any resistance below 30? Well, all I got to do is look at the magic dotted line, right? And I see that there was a bunch of developed volume. Remember, this is like a developing point of control. I've got a bunch of developing volume right there at 13,130. The chances that we bust through that are low, right? That's probably going to be resistance. It's not always going to get there, but that's probably going to be resistance. The other thing that's probably going to be resistance in general, in this kind of situation where you trapped someone up above like this, is wherever this guy that got trapped, before it happened, wherever the most conservative buyers were, okay, the most conservative buyers on the way up, who might have continued to hold here as we dipped, wherever they're going to feel like they finally got back to break even, that is going to be a solid resistance. So there's a lot of ways to find those. A real obvious one is to look at like a candlestick chart and to find like a 5-minute low or a 15-minute low. That's a real easy way to do it, right? So like you could say like this was a 15-minute low and this was a 15-minute low on like a candlestick chart. And you can say, you could draw lines there. I guess I could show you, but I'm sure you get what I'm saying, hopefully. NQ15. Is it aligned? Let's see. So if I draw lines, what time is this? 9:30 on Thursday. So if it's 9:30 on Thursday, 9:30. If it's 9:30 on Thursday, is that right? Yeah, and then it should go lower than that. Make sure I'm on the right day. $9.30. Okay, so this low and this low, right? So here and here. those lows were put in before the highs of that time period. Now we're talking time period, right? And then they got stopped out or got offsides, right? It would be very normal for these two lows to be future resistance. See that? Once we get back over them, we can make new highs. But until we do, that's a very natural place. Well, I guess it doesn't. I thought it would copy, but this and this are very natural places to look for here. Resistance. So if I mark this and I see that it's like, oh, it's right at that same spot, right? Well, the likelihood that that's going to act as a resistance is really high. So even if it does get all the way up there, it's eventually it could break the high, right? But before that happens, we're probably going to fight over that zone. Is it going to be exact? No. Don't worry about the exact highs and lows. It doesn't matter. The idea here is, do we have risk reward with our current setup, right? And so that would help you decide, can I get into this trade or not? So when you're looking, so we said that the resistance is at 130, right? If you're looking at this trade on the smaller time frame and you're like, okay, I know I've got resistance up here at 130, right? And I think I might be able to get up there. But what I want to know is, can I take the trade at 13,115? Well, if you can put your stop at 13,100 and get a 15-point stop, then you could target 130 and get about 1-to-1. Where I have trouble is if I see this, it's very difficult here to hold your trade and not just take like 4 points. And I'm honestly not sure what's optimal in that situation. The problem with exiting early is you miss out every single time it goes to your target. So like your risk reward wasn't actually as good as you thought it was. The problem with not exiting is if this occurs at a spot where you kind of thought there might be resistance, like, I don't know, maybe you have another signal on the left that told you that this area wasn't contested before, and suddenly now there's no buyers there. Well, it kind of makes sense that it's going to be hard to get over that without trapping a seller first. So what I've been doing, and I don't know if this is right, this is just what I've been doing, is if I take the trade that had like the 1-to-1, so in other words, if I took this entry rather than this entry, because remember, this is the conservative, this is the aggressive entry. Purple bar followed by aggressive bar, touching or right below or very near the green line in a situation where I have 1-to-1 risk reward or better. That's my aggressive trade. I want more than 1-to-1 here, and I have it. So that's an okay trade, right? It's like an 11-point stop, and I think I can get 15 points. That one's fine. This one closes at 15.25. So now I have just under 1-to-1, but it might still be okay if I think I can put my stop a little higher. And I probably can put it just below this VPOC because this VPOC is below the dotted line. So if we lose that dotted line, it's probably over, right? Well, then they go 1 bar higher, 2 bars higher, right? And I technically want to get up here. And then if I see them struggle here and pull back, right? Now, you could say they struggled here too. How do you know not to exit? You don't, right? You need to use either smaller time frames, which is what I have to the right. So you can see over here on the 8 tick, the entry set up beautifully. We have a low, right? They've got a trap back in on a ring bar, which is just perfect. Right, so if it's slow enough to see that, that'd be a good entry right there, and you could get it at 08, let's say. But if you wanted to be conservative, you'd wait for 10, right? And you put your stop down here at 3,100. And then what you'll see is they fly up probably had no time to process that move. So this move was fast, right? And then what they did is they pulled back 1 bar, and then they put a dot here. Okay, when this is getting into the next step, because remember this works on all time frames. So back to the setup again. When you have the green bar, the green line that's broken by a purple bar, and then the aggressive signal comes after that. You really want it to be the very next bar, but it can technically be 2 bars later, like this. This is still okay, technically. You would prefer that this VPOC is as high on the bar as possible. What you don't want is this bar. You don't want the VPOC to be way down here unless it had a star or something, and then you could say you trapped him at the lows, but usually you want this VPOC high up. A star here is great, but if you got the VPOC way down here, it could be a problem, right? But you can see that volume wasn't really able to get to the lows, even though they had 1, 2, 3, at least 2 chances, right, to get down there. They couldn't get the yellow line down there, and they could not. The most important thing is they could not get the yellow line on a bearish bar below that low. That's the most important thing. This VPOC never broke the dot, right? And so now on a bearish bar that's not purple. So now this is a valid entry as long as you have a target with 1-to-1 risk reward ratio. And my primary target would obviously be right here on this time frame, which it does hit right there, right? So the confirmation that everything's working is getting a blue dot. If you're bullish, you want to see blue dots getting continuation and not yellow dots. It's okay if yellow dots got continuation before your entry. That's great, actually. But you don't want to see yellow dots get continuation after your entry. A yellow dot is a sign that you've got buyers. Let me see. How can I explain this? You had a moment where buyers showed up, yet they closed the bar bearish. So there was aggressive traders somewhere in the bar, but they closed the bar bearish. And that's not always bearish. If the context is bullish, like this, like you just trapped a seller below a blue dot and ripped, right? Seeing this at resistance should be expected, because what happens at resistance? Buyers buy, momentum traders buy the breakout, right? So as long as those buyers, if you ever breakout momentum traded, what usually happens is you buy the breakout and it fails, right? It's normal. It's literally what happens like 60% of the time. Then sometimes it just runs, right? But most of the time, what happens, okay, maybe not most, but like at least 40% of the time, let's say, it breaks out, tests up there, rejects, and can't find any more sellers lower. Thus, the only way to go is higher, and it works its way through, building volume as you go, sometimes failing a second time, but the idea is it continues in that same direction as the breakout, just not with the gusto that the momentum traders want to see. So the momentum traders are exiting the market, probably, or at least feeling very nervous here, because there's illiquidity. There's a purple bar. Everyone's giving up. Whoever was buying up here is like not adding to their order, and they're pulling their orders off the order book. And then sellers do the same thing. So like when I say when it's purple and pink in the same area, basically no one wants to do business here anymore. So price is leaving the area, right? You had pink, volume shift, buyers, purple, pink. No one wants to do business. And you had purple, pink, purple all over the place, right? No one wants to do business here anymore. Either it's going to take out this low or it's going to take out this high, but it's not staying here. Nobody's here. Everybody who wanted to buy is bought. Everyone who wanted to sell is selling, is already sold. And people are just pulling their orders off the order book. right? For one reason or another. So what you have to watch for here is, first of all, be aware of your higher time frame and ask yourself, do I have a reason to think that we might be lifting? Do I have some kind of target? Are we oversold? Did I have a level? Right? All those things. Am I bullish on the higher time frame? Right? Now on the higher time frame, for instance, we had a apex trap, which is totally valid. Right? We've already taken out a low. I wouldn't buy this first one. I wouldn't buy that one. But if you want to try to get one across the chasm at the low here, be my guest, right? Like, is it great? No, but it's not bad. It's not against the rules. It's the first bullish bar to come back up into this bar's range. It's valid, right? And if you were doing that, you'd hope that you'd get back up to resistance, which is 13,125, 26, right? So it's the same trade, just on a higher time frame. But the important thing to see is that there's a reason that you might want to be bullish here. We had support here in the past, and despite trading under it, they couldn't put volume very low. It did get under the low, which kind of sucks. But then they bounced it, right? And then in my opinion, as long as you get this triangle to show up, it's probably okay. But down here, what we saw at the same time, all of that basically is doing on the smaller time frame is it's like lift off, 50% pullback, maybe 61.8% pullback. Look, it's like any time frame, it's the same thing. So 70% pullback, right? Big pullback, I guess. High, right? But no close above. So in my opinion, when you can't close above the apex, right there. When you can't close above the apex, but you test above the apex, in my opinion, it makes sense to move your stop and be a little bit aggressive. So for instance, I might want to say if I close a bar under this, I just want to be out. Or if I close a bar underneath this, I might want to be out. So give me 5 points back on my stop, because I've already seen bulls try to save this green line, right? They tested below it and saved it. So if they come back and test it again right away, it's probably not that bullish. That's what is my thinking. And so when they can't pull back, the first thought is, well, hey, I'm sticking with the trade, right? And so as long as you continue to develop, now it might not be smooth, especially in the smaller time frame, but as long as you continue to develop volume higher, and you can see this yellow line is generally chugging its way higher, and whenever it does pull back, you get a bullish bar with aggression, right? There's really no reason to think that it's bearish at this point. And then you can see that the trailing stop now lifts, and now I'd say, sure, trail your stop with it, right? Because now look, it's lifting at a steep peak, steep angle, and that's typically a sign that it's pretty bullish on this time frame. Now, take a look at what's going on in the other time frames, right? At that same time, right here, you got the first lift after the buy, right? That's exactly what you wanted. You wanted to get into the trade on the test at or below the green line, and then you wanted them to lift right away. You got what you wanted, right? So if I hit my target here, I'm out. I'm just done with the trade, right? There's really no reason to hold a runner in this situation because you've got trap buyers up there, in my opinion. So our expectation now is it's probably going to come back here and trap off this low and then make a decision on what it wants to do. And on the smaller time frame, if you weren't sure here at the highs, like here, if you weren't sure here, if you wanted to be getting out of the trade or not, if you're like, oh, maybe I'll hold some runners, I don't know, it doesn't look that bearish, look at how steep this is, right? Well, at least trail your runners like under for a close underneath the green line, right? I'd maybe put it at like maybe that dot or just below, maybe just below the dot, like right here. And if I can't get that, at least if I get back here, it's at least going to be a positive trade if I got in back here, right? Or maybe break even. This is one of those situations where putting your stop at break even kind of makes sense, but I think it makes more sense just to get out. Personally, you'll just make more. But if you must hold because you don't want to miss out on some sort of magic rip, sure, trail your stop, and then you can see they trail it all the way up here, and then see how it goes sideways right there? It starts to go laterally, not higher anymore. That is a indication that the market expects that line to get tested. So if you are not going, if there's a risk that you might make a mistake, if the market drops down to that line, like whatever the best thing you're supposed to do, whatever your plan was, if you think there's a chance that you're going to go against your plan, if it touches that line, then just get out here as soon as it starts going sideways. Plus, you've got a star at the highs with a dot. And like I said, every time you see a dot, you know there's a chance that someone might have gotten trapped. Every other time we've gotten a lift, right? Dot, immediate lift, dot, immediate lift. And all the blue dots are acting as support, or else they can get trapped back in, but in this case they have not, right? So it makes sense for us this time, now that we've hit a natural target, to come back and trap back into one of those dots. And we've got 3 of them in a cluster. And we know from like taking data that the more you have in a cluster, the easier they are to break. So those are all reasons just to get the heck out of here, even though it's supernova, and just wait for a better setup on a higher time frame. But what you'll see is they do come back and test under the line, right? But they don't give us the purple bar that we wanted for an entry. For an entry, we would need purple bar followed by all these signals, a star, a diamond, a dot, something like that. We didn't get our purple bar, so we're not interested in buying that, right? And on the higher time frame, if you see, all it is buyers just pulling orders. Everyone's giving up as soon as they saw this one aggressive trader. Because look where he bought. Look where he sold. He got a great, most of the orders on this bar was way up here, producing a star. Right? So right away, that's why I said, hey, if you see that, just get out of Dodge, because you know on the higher time frame that there's resistance up there, right? It makes sense that he would reject. Then what I'm finding, this is the newest idea. So that's idea number 1. I don't want this to get too long, but idea number 1, on a higher time frame in particular, if you just use the trailing stop like it's supposed to, as long as there's actually momentum, it works. It's just that it doesn't work great for futures because your stop is going to be rather wide, right? Or you get so zoomed in that you get stopped out back and forth. So what's probably better is use the trailing stop once you have momentum identified, if you need to, but look for opportunities to move that stop to a better location, and instead use the angle of that line to tell you right here that you got to pay attention, because the market thinks that trend needs to rest. Now note, it did go sideways right here on the 8 tick, right? And so technically you'd expect what? That gets tested. Well, it did, just on a different time frame. See that? It did. It just, and like here, look. Sideways, test, purple bar, star, entry, right? Sideways, couldn't get any bars lower. See that? They had one star bar and immediately printed blue dot, lift. Guess what? It's bullish, right? That was their opportunity and they missed it. That was their opportunity to sell and nobody took it. That's the one where things are starting to look a little bit more bullish. It goes sideways. What do we expect? We'd expect it to get tested. It does, right? So everybody bought here. They sweep everybody out, which is totally normal. They get underneath this blue dot and you get the better entry. It also set up in the higher time frame, which makes it the better entry. And so, like I said, we've gotten under the line. Now, if we reclaim the line without putting the VPOC on a bearish bar that's not purple below the blue dot or the apex to the left, whichever one is closer, right? Either this or the apex. And in this case, it's the dot. As long as we can't get that VPOC below there and then we get an aggressive bar, it's all good. Right? But we want this green line to be broken with a purple bar so that there's a chance that it wasn't really sellers who made that happen. It was just buyers giving up. And the sellers didn't show up until after they saw that, which means they might get trapped. So then we go back up. Now, if you look, there's a red line here. So if you thought it was bearish, you broke it with a pink bar, and then you had pink bar followed by orange bar. That's aggressive. That's an aggressive short entry, right? And you broke the red line with a pink bar, right? It's even yellow, which makes it even more vulnerable. You couldn't get the yellow line above this yellow dot, except for on a green bar. All of those things are bearish, right? But we're so zoomed in here on this tiny little 8 tick that it's not going to work, right? And we had a hint about that right here because we got the trade triggered on a higher time frame. Remember, this is 8 tick and this is 15 tick, so it's almost twice as big, right? And the market needs to move almost twice as much to print one of these bars, and that bar, that time frame, just triggered buy, right? Just on the rotation before. And when we get the sell signal here on the 8 tick, you can see there's no sign of slowing on the higher time frame, nothing, right? And on this time frame, the highest that we looked at here is 24. You also had an entry, right? Couldn't get the VPOC. Well, here you did get the VPOC below, so maybe not. But it's reclaiming this level. It is an entry. It's a trap back in. It's a traditional trap back in. So it is an entry. So 24 tick, bullish entry. 15 tick, bullish entry. 8 tick, bullish entry, and then 8 tick sell signal. Right? You don't want to just suddenly trade the 8 tick counter trend compared to everything else. It's just not a good idea. Right? Instead, see that as your target to trap. You can be like, okay, this is the guy I need him to lose money so that I can take it, right? That's the guy whose money, that's like the mark, right? He's the guy that you want to steal money from. And, we already had the trigger here, but even if you didn't get this and you didn't take this, let's say, well, it's better if you do it because then you're already in the trade, obviously. But let's say you didn't, right? And you just knew you were looking for a long, but you missed this, and you see this seller show up where you don't think it really kind of makes sense. It's like, everything's bullish, yet it's telling me they're selling this. Well, what you can do is you can wait for the very next blue dot, and particularly if it's on the very next bar with a big wick, you can get an explosive breakout. And so this is exactly what you want. Now, does it always immediately break out? No. But do you get an extension most of the time? Hell yes, you do. This works on every time frame. I will show you. Particularly the that continuation trade. It requires that you know what the time frames above you are doing to do this right. Okay? But I'm going to show you how even on the highest of time frames, we'll go to a totally different day. Okay? I'm just going to kind of randomly take a spot. And you're going to see when the setup to reverse, when that reversal setup fails and it's followed by a dot in the opposite direction with a very long wick, there is usually some sort of a trade entry there. It's not always a huge breakout, but it's worth taking most of the time. So let me go to, I'll just kind of cheat and we'll take, like, because if it's a top, then it's the reversals are probably going to work, right? But we'll just start here anyway. So like I said, what we're looking at is the green and the red, right? The green and the red. Oops, I have hidden drawings. So we have the green and the red, and I guess I can't use that because that's too much. It's too much to look at. So I'll just use the pointer. So what we want to see is when we pass those lines, right? When we cross those lines, and we want to see what happens next. If we can cross the line with a pink or a purple line, pink or purple bar, and then we immediately get a sign of aggression, it can be a reversal. But if that is followed by a dot and on a wick back in the direction of the trend, it's probably continuation. Okay, so first we need to break the line with a pink or purple bar. So first of all, we'll do this one first. So here, the purple bar is up here, It broke the green line with the bar that's not purple. There's really no reason to think it's a continuation here. Basically, yellow dots can be sold. So yellow dot. Now this one's closed. This purple bar is right behind it. So maybe this is a little bit risky, but technically that's a better continuation. I would love to get it up here, right? But if you had a reason to think this is going to extend lower immediately, this is your first opportunity right here to follow through with the down. And when I say continuation, I mean with the indicator, right? If I thought that the higher time frame than this was bearish, that has to be clear. Okay, so that would be your sell then. So we'd wait, and that'd be a better sell, right? Came back to the red line. This is and then tested it. We talked about that. That's your traditional retrace, and then yellow dot aggressive bar, continuation lower, right? That's normal. This is okay. This is better. And again, if you look at the dots, you can get trap back in trades. Oops, that's right. You can't see it. You can get trap back in trades off of this dot, as long as it's the very first bar of the rotation that closes back inside of this bar's range with the yellow dot. If you get another bearish bar that closes back at the very first bar to the bear side after a rotation up, gets back into that bar's range, and you have reason to believe the higher time frame is going in that direction, it's pretty good rotation, pretty good continuation trade. Okay, so we have to break this red line for anything to change, right? So there it is. We break the red line, not a purple bar, nothing to do, right? If anything, we don't expect it now to go lower. It's probably not going to reverse, and blue dots can probably be bought in general, right? So same exact thing, right? We have a blue dot, it gets trapped back in, and we close higher. It's usually going to go higher, and it does. Okay, here's where the line ends up here, so we're watching to see if we can break that with a purple bar. That's the first. Okay, that's not a purple bar, right? So we don't expect it to go any higher. Yellow dots can generally be sold. Our best one would be our best trade would be a trap back in with a pullback into wherever the red line forms. So there's the red line. We'd love to get a dot up there to sell. And instead of doing that, it just comes right up and breaks it, but it's not a pink bar. So again, this is why it's kind of hard to trade it with momentum, especially if it's choppy. You're going to get all sorts of stops once it's not trending anymore. But let's just say there's nothing to do and we expect it to go higher. But I would really want some kind of a dip with a blue dot to buy it, personally. Okay, so now here we crossed the green line, but we did not make it with a purple bar. Nothing to do, no dots. Here's the red line. Can we cross that? We can't yet. Can't cross it. So these yellow dots are just sells, right? Continuation sells generally. Sell, sell, sell. So we see how we can't quite break it, and then we get aggression to the sell side. This is usually a sell. This is a sell. This is a sell. All continuation. Okay, we broke it, but not with the pink bar, right? So there's really no reason to think we can get a setup to the downside. We should probably start looking for bullish entries to the upside. That would be the first one. It's most aggressive. A trap back into that would be better. Go a little lower and get another blue dot. But you might not see it. Sometimes it just lifts, right? You just got to be aggressive. Okay, we crossed the green line, but not with a pink bar, right? So again, no real reason to think it's just going to reverse. So blue dots are still buy. Okay, here's the green line down here. We're not even approaching it. I would guess that we're going to get a better entry closer to that green line soon. That dot getting trapped back in would be perfect. And instead they just rip right through it, which is why you can't just buy every one. I mean, you can. It's just you're not going to get a great win rate unless you have a reason to think that it's going higher. So they break it with something other than purple, right? Probably not going to reverse unless they can't get any volume underneath it. So we watch the yellow line. Haven't done it yet. Haven't gotten any volume below it. Oops, I forgot you can't see that. If you get a triangle up, it's probably a buy. And you don't. You get continuation lower. So this is exactly what I'm talking about, where it has the opportunity to set up for the reversal or whatever, and instead it does not, and you get the yellow dot, that's usually sellable. See that? So it's like right here, we think, oh, all I need is a triangle up to confirm, and I can long. If the next bar is not that, it's bearish, right? It's really that simple. And then if it sets up purple bar star or pink bar star, and then the next one has a dot, it's still follow the dot. Okay, here, broke it with pink, right? If the next bar is orange or a yellow star or anything bearish to the downside, it's probably a sell. It's not. So it's probably a buy on a blue dot. Oh, did they get it? Right there. This one. So this is our entry. It also touched the green line, and we have purple bar, green bar, which is, we already know that as an entry, but this is likely to work. And it does. And again, remember, this is 80 tick, right? Okay, can't break it with the purple bar. Is it going to reverse? I mean, it's probably just going to go lower unless we can't get VPOC below that line. So this is tricky. Look how it goes above. VPOC lifts, but there's no blue dot. There's nothing to do. It's just a yellow dot, which is probably sell. I know, Kat. I know. You already ate. You're fine. You just want to play. Okay, let's see. We can't quite touch the red line. Yellow dot, aggressive signal. Probably going lower. You can wait for the triangle if you want to be sure. There it is. Triangle. Duh. And break through it. Any reason we're going to reverse? Not really. Blue dot. Higher. Right? Green being broken with the yellow. If the very next bar is up, it's probably a reversal. Nope. So now this is tricky, but usually because you got a bar in between, if you now get a yellow dot bar, a bar to the downside with a yellow dot, it's probably a sell because this is not the ideal setup for a long. But the reason why I said it's tricky is there's a blue dot here. Oops. And if you drew that line, you'll see that we did not get volume below it on a bearish bar. See that? So if I get a triangle up, I'm probably a buyer. And we don't get triangle up, but we also don't get the sell signal. We don't get the yellow dot. It does go lower. Actually, because maybe the orange can be just as good as the yellow dot. Okay, we broke it with the pink bar. If the next bar is a star down or an orange bar or anything aggressive, it's a sell. Right there. That's a sell. Goes lower. Okay, we broke it with a pink bar. If the next bar is a down bar with an aggressive signal, it's a sell. If it's an up bar, then we want to look for a blue dot or maybe a green bar to get long. So it's not a bear bar, right? So we're looking for a long on a dip. We want a big wick and a blue dot. Probably not going to get it. Looks like we're not going to get it. We break the green with the purple. If the next one's bullish, it's a buy. If it's got a bullish signal. We don't get it, so the yellow dot is a sell. So I can keep going if you want. It's just the same thing. Now, like I said, that's the 80 tick, right? Let's take that. I don't know where we are. Oh, I guess we're back into today. So let's zoom into like the 15 tick, which is, oh, I see. This is like 2 weeks ago. We'll just do it when it starts showing the signals. I need to be able to see the stars and the orange bars. I've got too many bars loaded. Once they all start showing up, we'll just, wherever that is, that's where we'll start. Right here. Do I see stars? I haven't seen yeah, stars. Okay. So we'll just, I don't know what's going on in the higher time frame. It definitely helps if you do. But we'll start. I think the stars are showing up already. Purple, right? So if the next bar is bullish with a signal, it's probably buyable. There's no signal here. So my guess would be lower on a yellow dot. Right there. That's probably a sell on this time frame. So like the resistance is right here. And it hits. Right? Did I have risk reward to take that trade? Probably not. But the direction is pretty clear. We get another purple bar, green bar. They're probably going to lift it. Because look, we can't get a VPOC below that. See that? So if it's triangle up, it's probably a buy. Because on the second low, these ring bars, if they're followed by triangle up, that's probably a buy. For a totally different reason. Okay, pink, if it's followed by a bear bar with the bear signal, it's probably a sell. It's not, it's followed by a blue dot. That's probably a buy. Okay, we get a little bit. We probably run into some resistance. It turns around. If that's all we get, I'm not impressed with that. We did get the trap back in signal. Oh no, we didn't. It traded a VPOC below it. I can't buy that. So that star I'm ignoring because we got a VPOC below this one. Yep. Okay, green got broken. Not with the pink. It's bearish. Oh, I got a yellow dot already. This one you can sell. And you make back whatever you took the stop on before. Yellow dots can generally be sold. The trap back ins work better, but see how when this gets aggressively tilted here, you expect that you might get a pullback. When you get yellow dot there, and that's it, like, and then you see this, it's like, it's too, you just have to take the breakdown, is what I'm finding. Okay, volume is way up here. We're probably gonna get a pullback. There, see how volume shifted? Right, but that's a different concept. Let's just wait till we cross the line. Don't want to confuse everybody. Talking about too many things at the same time. Okay, broke the red without being pink, right? It's probably not going lower. This is probably bullish. So blue dots or else really any other setup. There, blue dot. I want it on a big wick because that way the risk of getting it immediately stopped out is lower, right? The bigger the wick, the more like sellers are in that bar potentially. So we get a nice little lift there. We broke it with a purple bar, so if the next bar is up with the bull signal, it can be a buy. Nope, it's a yellow dot, so it's a sell. Right? So, I mean, is it, it's not 100%, but it's pretty good. Is this a second low? Not really. It's a higher low. It might be okay. We break it with a pink bar. We don't reverse. Blue dots can be bought. No blue dot. Interesting. Nothing to do. Oh, they test the line and bounce after purple bar. That's probably a buy. I'd probably wait for the triangle here. And looking at this, my expectancy isn't great, right? We're consolidating. So I'd probably skip this trade, honestly, or take it on a smaller time frame. But technically that's a buy because we touched the line with a purple bar followed by a diamond. It's probably going higher. It's just, I don't know. There's resistance right here. So you really want to take it, right? Why not just wait for the next setup? There, broken with purple. Let's see if we can lift again. We can. So this is going to be hard not to take. And I don't really see any reason not to take it. It looks like it's probably not going to work. If you get a ring bar, usually you want a triangle after that. Technically, you want this white triangle to be right after that. So immediately, if you got in here and the very next bar is dot bear, literally reverse is my plan. See that? And then if you get a triangle after that, you can actually buy. Add if that not buy, you can sell. I can add to the trade as long as it's purple or small. It's better if it's purple and small like this. Okay. All right, broke it with a pink. Let's see if they reverse it. They don't. So bull on a blue dot, and they don't give it to us. Oops, they broke it with a purple. So now if it's a bull trigger, we would get in. Otherwise, yellow dots are sells. So that's a sell, right? Little scalp. These are just scalps on this time frame. We're targeting support and resistance nearby, right? Again, this star all by itself, that's nothing, right? It'd be hard to hold short, but it's technically still bearish. Okay, now that's a trap back into a blue dot, and it's purple bar star, but I'm way under the green line, so I'm generally not buying that. It's not a proper apex trap, so I'm not doing anything with that right now. Breaks the line with a non-pink bar. It's probably bullish. We want blue dots to buy, preferably on a pullback. Looks like diamond is probably good enough. Blue dot, confirmed. Ooh, that one effed you. Do they? Yeah, okay. So that's what I've been seeing does happen. They trap back into the blue dot. It's occasionally going to require 2 tries. I'm pretty sure this one's going to work. No. Okay, so this is the first time where you would have had 2 stops on the 15 tick. Let's see if I can suss out what's the difference here. First of all, flat line, right? Flat line here, not raised, right? We broke a flat line, which is good. We broke it with non-pink. We should be expecting sellers to have a hard time reversing this, unless there are sellers Oh, there's buyers stuck, aren't there? There's buyers stuck at the highs. You would never buy that. You need to know where the volume is. There's buyers stuck at the highs. So the easiest way is just to keep track of where volume was. But the other thing to think about, I guess, is that there's no triangle here. There's this triangle. Looks like a buy if you were bullish, right? But as you pull back, you should get a follow-through triangle here, and you didn't get one. So that's kind of weird. I see that. Here it looks like it's really bullish, right? And then it starts to flatten out, so we should expect a pullback of some kind. They put volume way up here with the yellow dot, and we know that that's often a sign of weakness, market weakness in general. So perhaps if you get in on a blue dot and then you see a yellow dot forming and volume's way up here, like to the point where it might make a star, it might be time to take a break. Plus, we could not get the yellow line above the dotted line except for on bear bars. Oh, that's a reason to wait. The triangle didn't get it above. See that? It's below it. The dash is below the dotted line. And there's no triangle here. And this one didn't get it above. This one didn't get it above. Yeah, that's it. So I just have to watch that dotted line and make as like a confirmation. Okay. Interesting. Cool. All right, so once they can't do it, then yellow dots can be sold. Purple, do we get a reversal here? Yep, so this would be an aggressive buy here. Otherwise, wait for the triangle to get over the dotted line, I guess. There. That's clearly a long. And the stop has to go down here. Blue dot can probably add there. Ugh. I guess the problem still is volume's way up here. Volume shifted down. We got triangle above. What am I missing here? Yellow dot. So this looks good. This is just a green outline there, and the arrow. There's no star. It's not green on the inside. There's no diamond. We did get the triangle. This one might just be a straight up. I mean, to be fair, it did extend. It just ran into resistance. So this might be one of those situations where you just have to recognize that the chances that you break over all of this are low because it's just not trending up. Was that clear on the higher time frame? Yeah. It's just, you just don't want to buy. We call this the waterfall of death in the room. And when you see that, you just don't want to be buying in general. But that's good to know. It does not overcome the waterfall of death. Okay, so, it comes up and it approaches the red and it puts in a yellow dot and can't get any closer to it. That's pretty bearish. And then it immediately goes 45-degree angle to the downside with the triangle that's purple and an arrow. This is probably a sell, if I had to guess. That doesn't happen here. See how like they never really approach this, and when they do, we don't get the triangle. Did this triangle get VPOC below the dotted line? It did. See that? Yeah, so that one's way better. So even if you took the stops, you'd make your money back as long as you don't size too big. So you can like manage it. Okay, so anyway, got to get over the... So see how we test above it, but we can't get over it. We can't close over it. That's almost always bearish. You can wait for the yellow dot, but triangle on a purple bar below the dotted line, probably good. There. That's definitely the sell. Interesting. Doesn't look like it's going to work. Oh, you needed 2 tries. It technically didn't stop out. Yeah, so it hung around here for a while. Eventually worked. This is a standard trap back in. Apex. Get under apex, trap back in, close within this bar's range. So that's just a trade and perform entry. So that's like the one you want to take with all your with the real accounts, not just the trial ones. Okay, we break above the red line with a dot, and the bar's not pink. It's probably just buy or buy a dot right there. Buy. Make your day. Purple bar touches the line. The next one's bullish. I'd prefer this to have a bullish signal on it, so I'd probably wait for the triangle, and that's probably a buy. Stop has to go underneath it. Interesting. So that one fails. Again, we probably have trapped sellers, trapped buyers, huh? Yep. Okay. So it's not going to do well into resistance. Stars and stuff like that, and red bars right above me. If there's no aggression on this and there's no room to resistance, there's no reason. And then, yeah, taking this would make no sense because that's your target. Okay. So I just got to remember stuff like that. Don't be too greedy about these tiny little pullbacks. Okay, so that probably means that this is bearish because that move is failing. So the yellow dots are bearish. Yep. I like that move. And then this, it approaches, prints a yellow dot, triangle down on purple bar, bearish. That's pretty cool. Breaks it with pink, potentially bearish if it turns around. Right there. No, it needs a triangle, I think. I don't know. 2 pinks. No triangle dot. That's definitely long. So if you sold this, you flip. Yeah. So even if you take, what is that? 10-point stop, let's say. You'd make 20. You'd make 10. You'd make your money back. And then dot gets beat. We don't break it with a purple bar. It's probably going lower, and that'd be your sell. Yep. See that pattern? Continue. Okay. Let's see what we can do here. Gotta break that red or don't. So the yellow dot, if this starts to pitch down on the triangle, I'd say sell it. It doesn't start to pitch down until after the triangle, so I'd probably not sell it. It's a little too extended for me because your target's here. This is a trap back in. You can just take that. Targeting 10 points. No dot here, so I'm probably not touching that. Yep, that's smart. Okay, get over it on something other than a pink bar, right? It's probably not reversing, so dot can probably be bought or wait for the trap back into that dot or another dot. Nice. So yeah, I'm not going to do these all, but that's how this works, and it is working on most time frames. It's not 100%, nothing is, but I am finding that at least over the last couple days, it is working on multiple time frames. I'm going to keep testing it. I'm not going to trade it with real money till I've actually seen it work in real time. But like what you'd see here, for instance, in the evening session, which started right here, you have trading underneath the green, not a pink, right? So we're expecting lower, but I think we need, oh, there's the yellow dot right there. So we relate to the yellow dot. Orange bar might be just as good as the yellow dot. I got to look into that. But maybe not. So we just kind of chop in here, not surprising for Asia, right? And then we're watching that, and this got beat by a blue dot. So you'd think that that would be the buy, but sometimes they stop it out. So this one is the buy. You get your 10 points. You got to know to get out when this dot gets beat. You know your runners are pretty much toast unless you can break this one. And so this is the one that I bought. I think it's still valid. We tested the green line. We tested underneath this. We closed bullish. I could have waited for the triangle up. Oh, am I facing... Where's the volume? Okay, good. Volume down at the low. So as I say, did I fall for that in real life too? Because you do have to be careful where the volume is. So right here, they shifted it up. And my VPOC is below that. I need a triangle. Okay, so if it's on, I think the easy way to say this, if it is on a very shallow pullback like this from a swing high, if it's on a shallow pullback of like 4 bars or less, basically, vertically, 1, 2, 3, it's 3 bars or less, I guess. you probably don't want to take the trade until you got a triangle. And the problem with taking the trade with the triangles, now you're facing resistance straight away. So perhaps I just don't take those when they're that close, and I just have to wait for more range. Or I wait for them to fail and then perhaps take the yellow dot. Does that work? Yeah, and so then this would be a sell. Oh, interesting. They broke it with the purple bar again. So if this bar has a yellow dot, it's a sell on this time frame, I believe. This one, though, the 24 tick, is trading right into the green. And the one thing I maybe didn't spend very much time on, but is super important, is give preference to the higher time frame direction. So because we've been trading way above this green line on the 24 tick this whole time, right, in the after hours, it's very natural to come back here and test it and then bounce. That should be normal. That should be expected, right? Well, we're doing that right now on the 24 tick. See that? And we have not yet closed below it. So it's really aggressive to short here. But if they close this bar and it's not purple, well, then it's a breakdown, right? And then if the smaller time frame triggers, then fine. But recognize that to make that work, we need volume to be stuck at the highs, and perhaps it is. I don't think I drew that right. Volume stuck right there. This is where the volume build, this green is the volume build. They got someone above it. They got someone below it. It could act as resistance. It's technically above us, right? We did get a VPOC below it on the previous bar on the 24 tick. So certainly if they can't lift it now, it's done. So yeah, if that's the case, I guess it's wait till you break this, and then any pullback that's developing a yellow dot, you can probably sell. And then on the tiniest time frame, you can see, remember, it's been bullish this whole time, and then it switched. We got so far away from it that they started to pull back to the green. So like where that happens, where is that? Right here, you're gonna see they broke down, and you have on the 8 tick, you have no opportunity for a bounce. So yellow dots are probably good because the higher time frame remember they went flat here, so we expect them to test it. So you could scalp short technically on the smaller time frame as long as they stay under this red line. And the dots should give you decent entries until you get to your target. Orange bars seem to do it too. See all of these dots, yellow dot, yellow dot, yellow dot, right? Or trap back in, or even better. Now they've gone above it, right? So now I'd chill. And that's not a pink bar, so I'm not taking that. But then they give you a yellow dot, which is probably good. But now we're too close to the target, so I wouldn't take it. They get underneath it without a pink, so I'm expecting lower, but I'm right at the target, so I wouldn't take the short. Right? It sets up, but it's like, what's your expectancy? Not very good. They try to reclaim it, they reject the level, right? So this yellow dot got trapped back in by this diamond, but it didn't produce another yellow dot, and it's not an orange bar. That's a little bit weak. It should have been pretty explosive if they were waiting to sell it up here. And instead all the volume was on this bar. That's what that diamond means, is it was a fast response to a big volume build. So if they can take this back, it's gonna bounce. But if they can't, it's gonna drop. Let's see if we get a yellow dot, and if we do, I will go ahead and sell it, I guess. Because this does not look like it's gonna be pink. Let's see. It's a little bit dangerous to do it here. I guess that's not really the ideal place to sell. What's probably better is to wait for this to form and then sell on a pullback if it doesn't close pink. That's probably the right thing to do. Why be in a rush? And with that in mind, it's kind of getting late anyway. I got to get into the clinic tomorrow. So yeah, wanted to do this. I'm probably not going to record it. I've got some guests coming into Vegas. There's my yellow dot. Let's see what happens. I've got some guests coming into Vegas to visit next week, so I won't be doing a lot of what's it called, trading, and I probably won't make a video next week. So I'll still share the Voodoo Range levels tomorrow for next week, and would love to hear how you guys are doing. If you want to get me on Twitter, it's at RedBenTrader. You can find a link to my Discord, and then if you want to join or potentially take a look at the paid trading room that my coach runs, you can contact Simon at trade_wordperform@gmail.com. Ask him all the questions you want about his algo and all that. So thanks everybody for watching. Sorry we got a little long.